Welcome to Power Charting. My name is Bruce Fraser, and you have joined us for episode number 9. We recorded this episode on September 25th to be aired on September 28th. I am with my co-host, Rouen Bogomazov. Rouen, welcome.
Hi, Bruce. Happy to be here.
So we have a great session planned. I'm excited about this. But we have a couple of announcements. One is we're very happy to report that Power Charting is available on the YouTube channel. So you can go to the Stock Charts TV YouTube channel and you can watch us over and over again, which we recommend. And the other thing that we want to tell you about is that we have a really important workshop coming up, which is a point and figure workshop, which is going to be very practical in its orientation, oriented towards trading. And we're going to cover point and figure analysis specifically for trading purposes in 3 time frames. We're going to do long-term campaigns, we're going to do swing trades, and we're going to do intraday trading and apply point and figure analysis to each of these time frames on a very practical level. Rouen, anything that you want to add on that?
Well, I think that one of the questions that we get from students is, how do you guys do this? How do you actually start your counting? So we're going to show you on a blank chart exactly where we would start our analysis and how we would identify the count line and how we would count those targets. And I think this is going to be extremely valuable.
And specifically how to trade off of the point and figure chart itself. So this is very exciting. We also, every Wednesday afternoon, 3 o'clock Pacific time, we conduct the Wyckoff market discussions, and we have a special promotion going. And this is a $79 monthly subscription, and that represents a $20 off per month. And we would encourage you to join us. You can join us, cancel at any time, but give us a try. Come check us out, because this is a Wyckoff-centric analysis and a great time that we Wyckoffians spend together every week. So we would encourage you to join our community. So Rouen, let's we have lots of charts today, so we got to get busy. So we are going to discuss crude oil, and crude oil has become very interesting, and we want to start by going back and having a discussion about crude oil relative to a blog that I wrote back in November. And you can see that I have been studying and conducting point and figure and vertical bar chart analysis on crude oil going back for a number of years in the blog. It's a wonderful instrument to study from a Wyckoff perspective, and Rouen is very accomplished in crude oil analysis. And so what I want to do is just show you this point and figure analysis that we did in November. And you can see that there's 2 segments. These areas are shaded so that you can see them. And segment 1, very briefly, and you can go back and look at this blog at your convenience, counts up to $94 to $97. And so we counted that just as soon as it jumped out of that accumulation area. And if you look over here on the left, you can see the vertical analysis right in the center of the chart. And that is the area that we counted. And you can see that after an initial liftoff at the beginning of 2016, and we wrote a blog at that point, but on that liftoff in February of 2016, there was a really robust advance followed by a large consolidation area. And we in Wyckoff would call that building a cause. And so this reaccumulation area after that liftoff was countable on a point and figure chart. So going over here again to the left, let's add the second segment, which takes us up to an area of 109 to 115. So we have room to run to get up to those counts from just from that count area, that causal buildup that occurred in 2016 and 2017. And then if you look over to the right on the vertical chart, you can see that there's a rising consolidation area that we are going to analyze today. Ramon?
Well, one of the things that attracted me to oil, and Bruce and I, we've discussed, a couple of trades that we've done in this area right here, was this segment right here. And if we would look at the volume signature, look at the increase in the volume signature. So the question here is why? Why would the volume number of contracts, and this is a continuous contract chart of oil, why would the number of contracts increase? While the result to the downside, the progression of the price was very limited. If you notice, guys, we are not violating a lot, of the support lines that were created back in 2016. So that shows that there is a lot of institutional buying. And oil is a very interesting instrument because you could literally use supply and demand. The announcements about the supply and demand availability in the US and around the world, in your trading. So there were a lot of good trades on the way up. And it feels, Bruce, to me that this most recent area right here also has a potential, especially in this latest area. So we should probably look at this right now.
Let's do that. And I'd like to say that if you go to that Crude Oil Runs with the Bulls, November 11th, there are links to prior crude oil blogs that were written previous to that. And so I'd go back and look at all of them because this is such a great case study. Okay, let's move on. And so, Ramon, what are we looking at?
Well, we're looking at the potential reaccumulation. Of course, we need all of the confirmations here. And there are a couple of trading ranges here that I would like you to see. One of them is the one that we have here. It's the upsloping structure. And it's going to be a little bit counterintuitive to think about a trading range as kind of like upsloping or downsloping trading range. But look at how many points on this chart are being respected with the support and resistance lines. The second area that we would be looking at is a much smaller trading range, which is more horizontal, so more in line with how we usually would think about. Whereas my attention is all about this area right here. I see how the volume has decreased substantially. So looking at the price to the downside, we also see that volatility has decreased as well. And specifically in the last reactions. So we have one reaction in end of May that has a lot of selling behind it. Then the next reaction has much less selling. And then look at the next attempt to go down. It brings a spring under the support area, and look at supply levels contracting even more. And then the subsequent 2 or 3 reactions after that in September also have a very low levels of supply. So there is definitely an exhaustion of supply at around these levels, and it seems that demand is starting to come in. So that suggests a timing for us that maybe at this point there is some room for the price to go up to the resistance.
That rising trend channel gives us such an interesting perspective because if we just focus on this area most recently, the far right of the chart, we can see that it went down and nested into the lower channel line and then rallied off of that. And you can see that it's barely off of the lower channel. Now, the channel is rising, and I think the fact that the channel is rising is actually very bullish because it shows an active support under the crude oil price all the way through this whole structure. But when you look at how far off of that lower channel line it is, it has a lot of room to run to get to the top of the channel. So we have a point and figure count here. And so we've color coded it. And there's 2 segments that we're looking at. And so we start at the right, we take the point, and this count could actually become larger And so we want to keep that in mind. But now we've taken this count from the last place that it pulled back, and we're counting the green area. And we count over in the green area, we have 33 columns. And this is a one box reversal. And we have created a user-defined price scale of 75 cents. And so point figure is very durable that way. So we can adjust the price scale. And we want to adjust it so that we get all the swings. You can see that on the point figure chart, we're getting all the swings that we see on the vertical daily chart. And so that's very important. So we can count from right to left, 33 columns, one box reversal method, 75-cent box size, gives us a count line of 68 and a quarter, and which counts to 93. And so we can see we count starting at 68 and a quarter. That's the count line. And so we have a target that takes us up to $93. And so we'll come back to this later because we have this is a confirming count. Then we go over, well, Roman, why don't you take the larger count?
Yeah, so because we have two counts, we call the first count trading count because we're expecting a move to the upside, kind of like a swing trade. We could have some kind of reaccumulation, a pause in the uptrend at that point of time at around 1993. But there is a much larger count, a campaign count. So that counts to 70 columns with one box reversal, 75 cents per box size at the same count line of 68.25. We're getting a very large number here, 120.75. And usually it's very kind of hard for us to think about those big numbers when we are still, in the 70s or even earlier, like when Bruce was writing the blog and taking that count of 115, 109, the price was in the 50s, I believe. So Bruce and I, we usually discuss this and we say that pointed figure counts is a convincing strategy for us. We want to make sure that there is enough buildup for a good uptrend that's going to last for some time. And I think, Bruce, that this number, 120.75, is that type of number.
And we actually, in the last cycle, had crude oil prices get up into the 150s. And so it's definitely possible. And we have a very strong economy. Strong economies tend to produce higher energy prices. And Roman, if you could just go back to the prior chart, let's just make the point here that in this previous point figure count that we took prior to this, you can see these counts are confirming the counts that we just did in this higher area. This is a stepping stone confirming count. And so this new count is confirming the lower count. And this is a very good technique to help us to confirm our prior counts that they're still valid. And so this higher count is confirming the count we took earlier, and they're confirming each other, and this gives us a degree of confidence in our work. Okay, Roman, thank you for that. And so we're going to look at, let's look at the energy sector. So the energy sector is the actual stocks in energy that are encompass the entire group. So there's a number of industry groups that compose the energy sector. But these individual stocks, we want to just take a minute and look at the structure of the energy sector and how it's trading at this time. So we have an important uptrend that has been developing since the middle of 2017, since August. We have an uptrend channel, and we've had a lot of volatility. The period from May to the present, you can see that there's been sort of a downward drift of a consolidation area, and we're looking at this as a reaccumulation area. And this downward drift has created a lot of pessimism in the space. So people have become discouraged about the energy sector. But while that's been going on, we've been building count. We're building a cause for the potential for a future up move. And so we can count that cause with a point and figure chart. So Roman, what do we have here for this point and figure?
So we're looking at this as a trading count because we're looking at this latest reaccumulation as a tradable count for us. So we have 9 columns with the 3 box reversal, $1 box size on the 72 count line. We're getting $99 as our minimum target. And one more thought here, just in general, that I want to convey with the energy sector. Why are we even looking at this? We started with oil, which you could trade with the futures, and I do so quite often. This is one of my favorite instruments actually to trade. But you don't have to trade futures. You could find other instruments to trade the same idea. So, and this is what we're showing here. We're trying to find some stocks that you could use to trade the idea that the oil might be in the uptrend. Bruce?
And there's, in many of these oil stocks, there's tremendous leverage in the company. So as the price of oil goes up, this accrues sort of like a leveraged appreciation potential in the individual stocks, because they're producing oil, they have oil in the ground, and so the asset of the oil in the ground becomes ever more valuable because the price is going up. And so these stocks can actually move faster than the underlying commodity, in this case, crude oil. So Roman, we have some, well, we're going to look at the way that we discovered the stocks that we're going to look at today. So we're going to go very quickly here. We're doing a quadruple top breakout system, which is a predefined scan that is available in the homepage for the members at stockcharts.com. And so you can go right there and look at these. So here's a visual of the example that you can see in the chart school. And so go take a look at this, and you can see that there are 3 peaks that are made, and then a 4th peak that breaks out above the prior 3 peaks in the consolidation area. And what you can see about that is that that's cause building. Though when you get to the point where you have 3 peaks and then you have a 4th peak that breaks out, you've built a big cause in the point and figure chart. So this is a very valuable scan for us Wyckofians, because it gives us an opportunity to look at big causes built in an area or in the entire market, and you can see what's getting ready to jump out and go. So we encourage you to go look at that. Now let's maybe take a minute and look at the screen. And so you can see the predefined scan results, point and figure patterns, and we're looking at the point and figure quadruple top breakout. And there is a total of 41 candidates in that space, and we focused our attention on the New York listed stocks, but you certainly want to look at the other areas too. We were focused on energy, so we have identified the 2 stocks that we would like to look at in this space, but you're certainly encouraged to look at the other stocks too. And so you can see Oasis Petroleum and Rouen companies. Those are 2 energy-related stocks. And I just want to make a note here. If you look up here at DBO, Invesco DB Oil Fund, there's an actual oil fund, an ETF, that is made this list also, and you might want to look at that. Okay, Roman?
Well, a couple of thoughts here. First of all, please note what we're doing here. I just want you guys to see this very clearly and to understand why we're jumping from one instrument to another. We started with an idea that oil had very, very long-term counts that are still not fulfilled. Then we went to a lower time frame, and we said that on the daily, we are possibly having an area of the reaccumulation, which suggests some kind of possible point of entry for us. We said that we don't want to necessarily trade the instrument, futures oil. We want to look at some other instruments, specifically stocks. So we're starting with this sector, energy sector in general, as a confirmation that yes, our idea is valid. And then we go down to the stock level and we're looking at specific stocks. And here, with all of the filters, we're just using specific filter. In this case, we're using the P&F filter, and specifically, that quadruple top that we're looking at. And in this area, we're looking for stocks that are energy oil stocks, just for us to find those stocks. And that's how we come to this point. So it's a process, which I would call, Bruce, in this case, top-bottom approach or top-down approach. We usually do this with the market sector industry group stocks, but we're using an oil here as kind of like the original idea for us to come to this point.
And when we have our Wyckoff market discussions on Wednesdays, we follow this process repeatedly over and over again. And I would only like to add to that we're looking at two stocks that came up on this scan, but you're encouraged with the very good stock charts tools to drill in from the sector to the industry groups to the stocks in the energy space, and then look at more and more of these, because there are many stocks in the space that have great structure to them and look quite promising. But here we've selected these two, and we're looking at, in this case, Oasis. Roman, why don't you take us through Oasis here?
Well, I'm going to start with the most obvious consolidation on the right that started somewhere at the end of May. So it's a very shallow consolidation. Look at the height of this trading range. So that just tells you that volatility is not there. And we could see this from the volume signature. It's going down. We also see that all of the attempts to go down are not resolving themselves, with the really big undercutting of the support. The support is at 12 or 11.5 about, and it's holding. So all of the attempts to go down are unsuccessful, which is a bullish sign, and we're obviously breaking out at this point.
But, and there's a quadruple breakout right there.
In a quadruple breakout. Yeah. 1, 2, 3, 4. This looks even more than quadruple.
It's a quintuple.
Yeah. So, but to me, the most fascinating picture is actually in this range right here. So what is it? I mean, obviously, this is an accumulation because we see that the price has gone up and now it's not giving up any grounds to the downside. But this structure right here in the middle of the range, where we have one segment of consolidation, which basically is a stop in action, of the previous downtrend, then we see some kind of sign of strength, which resolved itself as an upthrust. And then we have a second segment in this trading range. So obviously we could go through quite a few, accumulation attributes, to both of the sections. But this area right here is very unusual to see on the charts, and especially in the accumulation. One of the clues here that this is not a heavy selling is all in these two price spreads. Look at how the selling happens on probably some kind of event driven catalyst, and we're being sold back into the trading range. But then the next bar also has a high volume signature, which is reflecting not only the increase of supply, but also increase of the demand. And that increase of the demand suggests that institutions are buying at this point, and they are attracted to this instrument. And therefore, we just need some testing process for whatever supply has come in. So a very interesting structure, Bruce.
And that demand is showing up as that large tail on that low day, as an example. Large volume, a tail, and then from that it tests it and then has a nice rally afterwards.
Well, Bruce, what about the count for us here?
Well, we have traditional scaling. So this is under $20. It's half point box size scaling. And we have 7 columns that we can count across, 3 box reversal method, so 3 times 7, 21, and then half point box size. This gives us, from the count line of $12, gives us a target of $22.50. So that's a great trading target. So we're looking this as a trading campaign, a trading stock to consider. The count, you can see here that there is the potential for much bigger counts. And here's a hint, go back and make a weekly chart of Oasis, and you're going to see that there's a huge accumulation type structure that could be analyzed. And so we may want to consider Oasis as a campaign candidate. And so we will spend one of our 3 sessions on Point and Figure on campaigns, how to conduct a campaign with a very large accumulation structure. And so go back as homework and make a weekly chart of Oasis and analyze it.
Well, that sounds so great. I want to attend those sessions, so I'll sign up.
I hope you do, because you're the co-host. You're scaring me.
All right.
Okay, so we have just enough time to do Rouen. And so you can see here that there's an area accumulation structure that goes back all the way to early 2016. This is where crude oil made its low and started to accumulate. And in the middle of this structure in 2017, we took out that low in Rouen for a month or so. This is a weekly chart, actually a couple months. And then it turned around and came back up into the range, which is a very good sign to see a stock after making a low like that come back into the accumulation area, which gives us additional confirmation that accumulation is taking place. The next decline that comes down in 2018 in the March-April time period is able to go down pretty stiff decline on expanding volume, does not go to a new low. As a matter of fact, it stays at the support area, consolidates there for about 6 weeks, and then rallies again. That's further confirmation. So Roman, take it from there.
Yeah, so this reaction that Bruce just went through has some supply that suggests that we need some kind of retesting. And the test happens as a higher low. And this is so good because we always want the test to happen structurally as a higher low and on diminishing supply signature, and we have both of those here. And please note that, you know, with the tail here or at the close, and this is a weekly chart, by the way, so this is a huge structure. At $13, we're approximately close to 1/2 of the height of this range, so which is also very positive. And then, obviously, because this is such a huge formation, it took 3 years or about, to be formed. We're looking at the campaign count. Bruce, why don't you walk us through?
Well, 33 columns across. We're using ATR scaling here, which gives us a box size scaling of 68 cents. And so we're doing, this is a very big campaign count. 3-box reversal method, we have 33 columns, and we multiply that by 3-box reversal times 68 cents box size, and we add that to the count line. And we take it from the low. We're taking it from the low there. And that gives us a count all the way up to 76.84. And so that is a substantial potential. And here we are just knocking on the door of the resistance area in Rouen of this large accumulation area. So to see this be able to jump out, it's had sort of a climactic run up to the resistance, and we expect resistance to stop the advance at least for a little while. And so we might watch to see what happens there. There's a lot of potential in this chart. Roman, we just have a few seconds left. We want to thank everybody for joining us for Power Charting, and please be part of our Wyckoff community. And Roman, any last thoughts?
Thank you, everyone. Come to our classes, watch our videos, and ask questions. Thank you, guys.
On demand, yeah, on demand. See you soon. Thank you.